Hello and welcome to Pro Trader Strategies Market Commentary for Monday, August the 14th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember the past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on. It is a Monday, not a whole lot of economic data today necessarily. We did get some industrial production numbers month over month across the pond, and the European region came in below expectations at negative 0.6%, was expected to be negative 0.4%, and they revised last month's number from a positive 1.3% to a positive 1.2%, so a slight downgrade there. We also get monetary policy meeting minutes out of Australia, but I don't think that that's going to be major market moving. Onto the overall markets, they are saying Kim Jong-un, anyway, the North Korean nuclear crisis kind of, getting washed under the, or I don't know, pushed under the rug or something. I don't know what the best analogy is, but at the end of the day, the markets have kind of forgotten about that. Crude oil up slightly, just in positive territory by 2 cents. Did go up and test that Fibonacci level. Talked about this. It's really going to have a tough time breaking out to the upside or downside away from this $49 handle. So the markets are going to be quite content at this level unless we get some real market making move like some rhetoric out of Saudi Arabia or something along those lines. Gold futures, they're off on the day and down about $3 as the overall equity markets are moving. So that kind of gears are working correctly as the equities move higher. The flight to safety kind of pulls out, but an odd thing with the flight to safety is people are really diving into Bitcoin. It's up over 4,000, like almost 4,300 right now. So gold kind of probably losing a little bit of its luster towards that Bitcoin as millennials are kind of really throwing their money at Bitcoin based on what I've seen anyway. But gold futures struggling to remain above the positive area, just in negative territory as the overall equities are moving higher. Bonds, same thing, slightly in negative territory. Volatility is really coming out of the markets as these markets are moving higher quite nicely today, but bonds in negative territory as things like the Dow Jones up quite nicely today. Dow Jones up almost 150 points right now, above that 5-day moving average, which is pretty key for the bulls to get back above and settle above there for that market to continue to move higher. Then we look at the NASDAQ. It's also above the 5-day moving average and almost retracing all of Thursday's losses at this point. But the NASDAQ up 62 points. If you remember, Thursday was a massive down day. That's when we started getting that volatility spike. And as you can see, volatility has really come out of the market. I'll probably throw up a VIX chart and check it out too. As a matter of fact, why don't I see if I got a VIX chart going right now. I don't, but we'll pull it up at the end here. E-mini S&Ps, again, same situation, up almost 25 points on the day, 24 and a quarter. Market really moving almost straight up as we can look at the 30-minute chart of the E-mini S&Ps. As you can see, as soon as the market opened, we just went straight upwards, it seemed like. So that whole, whether or not it was going to be a breather and then continue to the downside, looks like that is out of the window. So in that, I've kind of looked to try and add some long deltas to my portfolio as well. So we'll talk about that here in a minute with Apple. In Apple, this is where I started adding some short deltas by selling some puts in there. I looked at doing the put butterfly in there because we have high volatility, take advantage of that. And then I started looking at the broken wing put butterfly, which We're going to be doing a webinar on that pretty soon, so I can teach you how to do that, where basically we'll be eliminating a directional move in any underlying using the butterfly. So I'm going to play around with the wings and show you how to build that out. But with Apple, I was playing around with all of those, wasn't able to get to it, so I decided to just go in to Apple and trade that as a short put, and went into the September. It sold the 150 puts for $1.15. So it's rather aggressive on those puts, but at the end of the day, the market moving higher, taking advantage of volatility. You can see it starting to come out. That's why I did it. And here we can take a look at the VIX on this here. As you can see, Friday, massive spike or Thursday and Friday, big spikes in volatility. Today, just getting depleted as the market starts moving higher. You usually see volatility come out. So I wanted to kind of scramble and take advantage of some of that volatility crush that's happening in the markets. Then with XLK, this one, I actually was getting close to 50% of my max profit on it. It's the ETF for the technology sector. And I went in, I had originally sold the September 55 puts in there for 56 cents. I was trying to set this up so I could buy them back for 23 cents. The market, mid-market on that was right around 33 cents. Something happened after I changed the pricing on that. It went back to 33 cents, went straight to the market, and I got 31s. So I bought those back for 31 cents, kind of somewhat of a fat finger error. I was just going to put those in there at 23 cents and let the market kind of come to me, but that did not work out very well. So out of that trade as well. So that's about all I got for you guys today. Friday's webinar is going to be a really good one. Go to PutTraderStrategies.com, sign up for that, and if you can't take that, take it easy.